Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of Paris milling wheat, Minneapolis wheat, and London, UK feed wheat. Paris milling wheat. In late May, prices moved up to arguably the most difficult overhead congestion on my daily chart, between 267 and 270, where the market was capped and turned into a V-top. Prices exited out of the prior bull channel into a new June-based, quite acute bear channel. The market reached down to both the primary and secondary target at 233, where it exited at the same time out of the steep bear channel. The exit was in amongst some significant supports, namely congestion at 227, the gold highlighted long moving average at the time, currently at 226, the now flatlining medium moving average, currently at 235, the bright red neckline extension, the June to November 2023 head and shoulders top, currently at 236, and under the overhead congestion between 238 to 242, containing the March 2013 high at 240. Of all of these, the two most important were and are the bright red neckline extension and the gold highlighted long moving average. Looking below, I said 8 weeks ago, and I quote, "An obvious area of support is further below, starting at the 50% absolute Fibonacci line at 219, and mainly centered around the old descending triangle and bullish halfway hesitation from April between about 213 up to the 50% absolute Fibonacci line. However, I only point this as an obvious spot, not necessarily a strong support." End of quote. The market had in recent weeks hesitated, dipping, then pulling back up, and initially forming a dark blue highlighted late June to date bear channel, currently 209 to 228. For this reason, I said the following 6 weeks ago, and I quote, "V-tops such as the one here sometimes form a handle or sideways action, usually a pennant or a bear flag on the way lower. Sometimes, and this is very rare, they form a flat rectangle. The issue is that a handle is a hesitation in any otherwise continuous move lower, but a rectangle, well, that is the end of that pattern, or in other words, the end of the March to date action. The next few weeks will define which course this market chooses." End of quote. Now, recently I had thought the extension would be some such pattern, but another pattern started to show up in my mind, and that is to look at the dark blue bear channel morphing into a possible descending triangle, with the base on the May 2023 low at 221. Now, the pressure in any V-top with an extension would be for lower prices, and that is what we needed to look out for in the immediate future, especially on any potentially significant move below the May 2023 low, and especially below the dark blue lower bear channel line. This week we had a gapping move lower below the May 2023 low during the course of the week, and even below the 50% Fibonacci line, absolute Fibonacci line, at 219. There's been enough for me to lay out some potential targets for the descending triangle. Thus, the primary target will be down in the 212.5 zone, with a secondary harder to reach target down in the 204 zone. It is still, I've marked them X and X1. It is still an early break and it may revert back up, but there's been enough to put forward these two targets for now. Minneapolis wheat. My apologies for the bright red labeling on my daily chart. My charting package sometimes throws a wobbler and does this sort of thing. There is no special significance in the red labeling. So, back in late February 2023, and especially at the start of April last year, so that is now outside the parameters of my daily chart, the market constructed a large bear channel that morphed into what is now on my daily chart, descending expanding wedge pattern, currently 688 down to well off the bottom of my daily chart. The upper trend line is currently escorted and reinforced, and has been for some time, though not very well recently I have to say, by the declining long moving average, currently at 682. I've kept this breached, large, original descending wedge pattern still on my daily chart, as the others that were here, originating from August, September and October 2023 through to April 2024, they just sat as so many Russian dolls within dolls, have all been thoroughly broken, and this largest one is still here because I've chosen to keep it on my daily chart just in case. Going back to the market action, prices exited out of ultimately this short-lived late April to early June very steep and acute bull channel by the capping action 10 weeks ago of the July 2021 low at 778. Initially it didn't look that aggressive, but this resistance stopped the rise and turned the market lower, back down within the descending wedge pattern, back below the long moving average and down through many supports that are now resistances. The move created a June-based, very narrow, very acute bear channel. The most surprising feature of this climb was not how prices was how prices sliced down through the congestion formed over February and April between roughly 676 down to 635, as if it wasn't even there. The market dropped down to the October 2018 high at 611, the April 2021 low at 606, and most importantly, the green highlighted September 2019 today uptrend currently at 592, which held despite not directly being tested. That's important. And with a stunted horn bottom in the middle of July and a fuller bottoming action 2 weeks ago. This green uptrend is perhaps the most crucial of all the support levels, as below we really don't have that much support until the December 2020 low at 542. It also ties in with what ultimately is likely to be the big picture pattern here, created since February. So for about the last 5 months, you see this whole action had been an inverted diving board pattern that morphed into a V-top with an extension since late June. This extension has so far taken the shape of an expanding wedge pattern, highlighted in dark blue on my daily chart, currently 585 to 658. Looking at the July action specifically, I can also see the possibility for this expanding wedge pattern to morph into a possible cat's ears pattern. Now, for those who are unfamiliar with this pattern, a cat's ears pattern, it is in essence a type of double top pattern seen after a significant decline, such as we've seen in June. Right now, I still consider it a possibility, but as I've stated many times in the past, I've always suspected Minneapolis wheat to be a leader, showing what eventually will happen in the other grain markets. I'm watching this market very carefully, as looking below, as I said earlier, we really do not have that much support for some distance. London UK feed wheat. I'm sorry this daily chart is so colourful, but there's a lot going on here in a relatively narrow range. Okay, so the extension of the neckline of the green May to June 2023 reverse head and shoulders bottom, currently at 195.15, is an important and recurring dynamic level on my daily chart. It helped cap prices in early May, eroding the bullish incentive, such that the market was ultimately capped later on in May by the August 2021 high at 199.20 and the March 2013 high at 205.05. Altogether, these created a V-top pattern with a very sharp downward slope that became, and here is the leap of faith I previously asked you to make, and do so again this week, became a V-top with a ghost extension. The extension. Now, the ghost extension that was caused with the changeover in early July. The construction of the second part of the V-top was the very late May to late June, very acute and narrow bear channel. This bear channel overcame all the congestions on the way down, except the one at 164.95, just above the combined lows of July 2021 and May 2023 at 164 even. This congestion, along with, I suppose, one should include the nearby congestion from March to April 2019 between 161.95 to 165.75. Well, I'm not sure about how much a part these played here. Anyway, these congestions caused the market to exit out of the small bear channel, and we then had a changeover gap, a large one between 170.40 up to 196.45, and we have created, because it's a continuous chart, what do you expect? And we have then since created what initially and superficially looked like a descending triangle, but has since become a descending wedge pattern, currently 185.45 to 191.15. It's highlighted in purple on my daily chart. The big leap of faith is to imagine this descending wedge pattern tacked onto the end of the small bear channel tacked on the end, and thus we would have, as we have seen elsewhere in other grain markets, a V-top with an extension, only here, in truth, it is not. Nevertheless, there is potential for lower prices, possibly as far as the June low at 164.95. And prices tried yesterday to see if this was possible, breaking and closing below the purple lower trend line. Prices dipped and closed below the green declining short medium moving average, currently 184.20, and the rising dark blue medium moving average, currently 183.45. Finally coming to rest just above the September 2021 low at 181.70. And also, and this is an important bit, at the bright red lower tine, currently at 182.75 of the significant March to late June bullish Andrews pitchfork. Today we've seen prices revert back up from that pitchfork low over the purple lower trend, lower wedge trend line. But as yet, we haven't had enough action to sustain the move back up. However, on any move lower, we have sometimes obstacles in the way. And so looking at those, first off, the 50% absolute Fibonacci line at 180.5. The more recent March to May 50% Fibonacci line at 178.25. In between those two is the flatlining golden long moving average, currently at 178.80. If prices drop down through these, then we have little, even as far down as the base of the recent July based gap down at 170.40. In truth, we'd have to look at the lower time, currently 170.75, of the early March to late June bullish pitchfork, the shallower version of the same time period as the bright red Andrews pitchfork. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpick and ADM Investor Service International Limited. And here comes the final important bit.